What's going on, TPFX? It's Fractal back with another video. As you know, we get straight into the video, so let's do it. Today we're going to be going over higher time frame analysis and why higher time frame analysis is important going into daily bias. Then after that, we're going to be going into intraday, why if the daily bias is bullish, you should only be looking for bullish fractal trades. So it's going to be a lot. I know I haven't posted a video in a while, so I'm bringing you guys some good stuff. So let's get straight into it. So we're starting on the dollar index as we usually use as a benchmark chart for most of the assets. If the dollar is bullish, then we are on risk off. If the dollar is bearish, then we're risk on. So that just basically means if we're bullish in the dollar, anything going against the dollar is going to be going down. Vice versa, if the dollar is going down, anything that's against the dollar will be going up. So it's just a vice versa. So we can use the dollar for most of the foreign currencies. That's the reason why I use the dollar index, just in case anybody didn't know. So if you look at this candle here, this is a weekly chart, by the way, this down close candle. We're just going to be using this candle right here for higher time frame analysis. We're not looking back 30 candles into the price action. Yes, we know we're relatively in this high to this low. So we're looking about equilibrium. No wonder that there's a ton of consolidation around this area. But we're focused on this bar because this is the weekly candle for this week. So looking back into price action, I'm just going to look a few candles to see if I can get a discount or a premium price. So looking back a few candles, I see a down close candle. Last week, we traded, we opened here, had a wick up, we wick down, and we traded as a down close candle. But if you look to the left, there was a wick off of a order block, this last down close candle from a few weeks ago. So we're going to use that as our higher time frame point. It's pretty simple, guys. It's nothing crazy. Just go back, any chart that you have or any asset class you're looking at. If you're on a weekly, daily, any time frame, because price is fractal, instead of looking back multiple candles, look at the candles pretty close to price action. So right here, last week, we traded down into a bullish order block. So we can expect bullish pricing, not 100%, but we have to go down to a daily time frame. So we're going to do that now. Let's go down to that daily time frame. So this is where we're going to go and talk about why this level that I just marked out on the weekly time frame, which is a higher time frame, gives you an advantage when you go down to the daily time frame, which is your main time frame for either swing trading, day trading, or even scalping. The reason being is because all of those trades, you're going to be taking that entry on that specific day. So knowing what the daily candle is going to do in terms of being a bullish candle or bearish candle is very important. Now we're going to be talking about fractal range building. If you go back into my archive of videos, I'd go over fractal range building. Fractal range building is basically when you have a higher time frame level, which was the weekly. You go down to a lower time frame, which is the daily. And as price was going down and it hit this level that we marked out on the weekly, we can number one, refine it to the daily time frame. So I'll refine it to uh, this gap from this candle's low to this candle's open. It's basically a fair value gap mixed with a volume imbalance. So I'm just using the high end and the low end, right? So now we have a gap in the market. Price trades down on a daily time frame. We're expecting bullish pricing because that higher time frame level was a bullish order block. So now we get a confirmation on Friday. Boom. We trade up. Monday, we opened, we traded down. it didn't necessarily trade down into a clear PD array. So Monday was a lower volume day, which it usually is. However, if you're fractal, you'll notice that this candle here, we closed here, and then on Monday we gapped up and opened at the high end, traded down into this closing price. So that closing price is a um a PD array. If you want to get more technical, you can use this level here, and now you have a inversion fair value gap, right? Because we traded above it. Now we use that gap, the low end, to now trade up. And this is what I was specifically focused on today during the New York session. But before we go down to the lower time frames, where are we looking for price to trade up to for the draw liquidity? The most easiest place to mark your draw liquidity is the old high, right? So this is fractal range building. We have a higher time frame level. We refine it. Then we look back into the range to find the high. So now you're looking at a fractal model from this low. We're expecting price to trade at least into this order block, but the best case scenario is punching above these equal highs here. So let's go down to a 1 hour chart. So now we have a couple levels on the chart. We can see that Friday we traded into the fair value gap and we've been trading up. We have a consolidation on Monday, but if you're watching the higher time frame, you know that that was a daily inversion fair value gap level. So notice we have a beautiful 1 hour optimal trade entry from this low to this high right here. And this was in the Asia session, right? Around 8 p.m. New York time. So you have a low, you broke the structure, and it traded back using the higher time frame daily inversion fair value gap as a buy level, the low end. It traded down into the 62.79%. So when we're buying, I didn't necessarily buy in Asia, but when we're creating this optimal trade entry in Asia, and now we're trading up, we have all of these confluences that the daily candle is going to be a bullish candle for the day, right? So we're going to mark out our chart as I taught Tuesday at midnight. We opened here. So now we can get into the daily candle, the daily range. We have a higher time frame bias now. We are bullish. Our higher time frame level is all the way up here, right at 99.57. We're down at 98.95. So we have area to move higher. So with that being said, using the model that I teach, even though, let me mark out the opening. Even though we opened here and I teach that we should be looking for the buy setups below the opening price, if the daily chart is bullish, the model can still happen or show above the opening price if we're still bullish, because the higher time frame is bullish. The daily chart, it's going to move it's going to move up. And with that being said, that doesn't give the 1 hour any regard to trade below the opening price, right? Because we're bullish. If we were in a consolidation, yes, we would be looking for a drop lower, trade higher, and then a move in the New York session. But I'm already bullish on the day. So if we're trading higher here and I get a setup above, which we did, I'm still going to take that as a high probability setup because of the daily chart. So I'm going to go over the setup for today. And this setup came in the New York lunch, which is 12 to about 1:30 p.m. New York time. So 12 in the afternoon for New York time, we opened and we traded below this old low and this old low, right? Prior to that, there was no old lows taken. There was old highs taken here at 8 a.m. And yes, you can probably have went short for the session. But as I told you, why would we be looking for shorts if the daily chart is bullish? We would have to wait for the bullish setup, which was in the London lunch. So let's show that now. The London lunch, we opened and we pierced below these two lows, which is the relatively equal lows. And this is the sell side liquidity that we look for, right? Once we punch below that, we can now go down to a 15-minute chart. On a 15-minute chart, we want to look back into the range for old highs. I see two old highs. We have one right here because this candle is lower than this one, and this candle is lower than this one. So this becomes a 3-bar pattern and old high. So we can draw that out. That's buy stops. We can look to take that out. The next one would be up here with these two highs. These are relatively equal highs. These are the next buy stops that we would look for. Okay. Now, as I told you, after you get your buy stops, this is fractal range building. You have a higher time frame level. In this case, this one is the hourly time frame. Then you go down to a lower time frame, which is the 15-minute. You mark out the highs. Is this not what I did on the weekly and the daily time frame? I'm showing you that price is fractal, but you need to know the fractal patterns inside of the higher time frame pattern. This is why trading is so hard. But now you guys have a better idea of fractal range building. So now let's go down to the 1-minute time frame and just show you the optimal trade entry that plays out after. All right, so we have a low from the hourly. This is a 1-minute chart. It gets taken during the New York lunch. We have a strong move up, which I talk about. Notice how we played into this volume imbalance here, right? You could have gotten there, but this isn't the setup. This move was strong, but it didn't really break above the full range, which is here. So it wouldn't be classified as a full breaking structure. So notice we then rally again. This move here, this is a strong move above 2 points of structure, this point and this point. So now grabbing your Fibonacci, I want you guys to do that on your own. Grab it from this low to this high and see if you get an equilibrium price point or lower, right? But for more insights, take your fib and mark it from the order block to the high. And mention you can type in the comments what level you get and if it was more precise. So yep, this low to this high, break structure. We have a retracement back down. And if you're not using the fib, you can still use PD arrays. We have a fair value gap right here. Let's get closer into that. So from this low, we break structure, this one, and this one. We retrace back down into fair value, this gap, and I can even mark it here because there's been a lot of volume imbalances lately. So make sure you mark out your volume imbalances. And you buy it here. Stop loss can go below this low, or if you want to be aggressive, below the volume imbalance. And then you would, number one, be looking to take your profit above this buy side liquidity, the first one, the nearest one, which we hit it with no problem here. And then your larger time frame or your larger liquidity pool, which would be above the first one, these two highs here, we are trading up there now. So hopefully you guys got something out of this on the dollar index from the weekly time frame all the way down to the 1 minute. As I said, drop a comment if you guys um, enjoy the video, or if you guys got something out of it, or if you guys have questions. I'm willing to answer any question. And with that being said, you guys can join our Time Precision Effects Telegram channel. And yeah, that's it. Have a good one, guys. TBFX.